Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592. The website at allamericangold.com. And welcome to Friday. Yeah, we finally made it. Gold is rallying. Silver's higher as well. Wall Street earnings have been absolutely terrible, but the bond market is just, Jason, throwing out recession warnings left and right. We've had a major sell-off in bond yields this morning. The 10-year note down to 2.78 as the Fed, let's face it, on Wednesday next week, Jason, out if it's going to be 50, 75, 100 basis points from the Fed, and the bond market continuing to say that the Fed rate hiking cycle is going to come to an end sooner than people think. I don't know about that, but that's what it's saying.
So we got the inflation number last week, and we're going to get the rate hike next week, and then I think we get GDP also next week. Is it
GDP as well? Yep, so, GDP as well. So GDP, second quarter GDP, will come out the day after the Fed rate hike announcement.
That doesn't. I don't think that's going to sing a very good tune for the markets next week, Joe. I would suggest that if you're a gold and silver buyer, that sometimes this kind of bad news filters into a higher price in gold and silver very quickly. So this might be a good time to jump in, Joe.
Well, right now we've got gold up just under another $20. It was up about $20 yesterday. Right now, gold's up $18 here, $17.32. Silver back above 1880. The Dow is mixed. Nasdaq's down 100, S&P's down 10. The Dow is up 40 points for right now. But we had bad earnings out from Verizon, Snapchat, Twitter, all these social media platforms showing a lot of weakness this morning, which has been weighing on the Dow. Home builders and just signaling an absolute stop. I know Jason was telling us yesterday one builder in one neighborhood, in a single neighborhood. You know how these big builders are. They build these huge neighborhoods, hundreds and hundreds, sometimes thousands and thousands of homes. Said that they had 35 signed contracts, 34 of them canceled out of 35. And that seems like that is starting to spread everywhere. That also has the bond market on its heels. One of the other big things was we had U.S. Manufacturing, and we also had PMI in negative territory in the U.S. The service sector was didn't quite go negative, almost did, and then globally, the weakest numbers they've seen since May of 2020. So, Jason, going back to the starts of COVID, just the slump, this slow crash continuing to happen, and we're going to get another big rate hike. Just like I told you, listen, they're raising rates into this crash, and by the time they realize what's happened, Jason, I think it'll already be too late.
And remember, the Fed is self-concerned no matter what. They could actually lose their little monopoly on money creation if inflation got out of their control. So they'll do anything. They'll sacrifice Wall Street. They'll sacrifice your job. And Joe, the layoffs are in my personal realm. You know, I talked to you this morning that the layoffs and the job firings and the small businesses being slain by the giants. That's all happening. It's 1.75. That's where the rate hike has gone so far. 1.5 is where we're at. That's where we're at. Joe, can you imagine the next two rate hikes? How many businesses are going to be losing employees, and how bad it's going to get for small business?
Yeah, and it's already. We were waiting on some credit card data. Already looks like the the increase in minimum payment. We don't talk a lot about that, but when interest rates rise, the minimum payment on credit cards rises with it. And now they're saying that once again, people are starting to show signs of stress. So we've seen it in the car market, right? Now the credit card market, and Verizon really mimicking what AT&T said on the cell phone side of things. Jason, the squeeze is on, and as the Fed hikes rates, those minimum payments on credit cards are going to continue to rise. So I would expect more and more people are going to be falling behind. When we get back, the largest landlord in the country, KKR, right? They're just a huge conglomerate. By the way, and I'll talk about BlackRock because that needs to be talked about after the break. They have slowed down all of their home buying in recent weeks. They own My Community Homes, American Homes for Rent, Amherst Holdings, and others. According to Bloomberg, they have rapidly decreased the rate that they are acquisitioning single-family homes. Institutional buyers slashing buyer activity by more than 50%. Just another one of these things with higher rates. I would expect that number to go even lower as well. But somebody's already preparing for the next crash. I'll tell you who it is. 800-951-0592, Patriot Radio News Hour, and we're talking housing again today. The institutional investors, which have been big parts of the housing market, pulling back, but they're also building war chests, Jason. And this is a sign that maybe we may be off on this. Maybe home prices will fall more than what Jason and I have been thinking. Too early to tell. But Next Point Advisors has raised $2.5 billion to use to buy homes in the future, but not to be outdone. BlackRock, man, these guys just, you talk about a company or I'm sorry, I can't, BlackRock, it's Blackstone, I apologize. They're preparing a record $50 billion that they say they are going to use to snap up real estate after the upcoming crash. What they're saying right now is they are the largest U.S. residential and commercial landlord. We just heard from the largest residential landlord, private equity group, KKR. Now, Blackstone is saying that they're building a $50 billion war chest. According to the Wall Street Journal, they're in the final stages of raising a new real estate fund that would set a record as the biggest vehicle of its kind, saying that the private equity giant in a filing Wednesday said that it's right now has amassed $24.1 billion. And according to the Wall Street Journal, they're allocating another $5.9 billion of investor money, bringing that fund to over $30 billion. But the fund says that they are still out there raising money. By the way, they expect to raise the rest of this money in less than 3 months. So it gives you a little timetable as to how quickly they think maybe this fund may be coming into use. Now, obviously, doesn't mean they're only buying U.S. real estate, Asia, Europe, the U.S. But, Jason, this is one massive war chest that Blackstone is building, getting ready to snatch up a whole lot of real estate. obviously they think that more in the very near future.
Well, remember the how fast the markets dropped in 2020, and then it just bounced right back up, and it didn't give the average person that's trying to take advantage of a dip in the markets a chance to get in and make a bunch of money. You had to really be paying attention, decide you wanted to jump in. You know, we had those 2,000, 1,000 point drops on the Dow daily in 2020. Why do I get the feeling these guys have an in, of course, with the government and with the Fed and the big players? And why do I get the feeling, Joe, we're heading for a recessionary or a depressionary type situation, and it's going to snap back into some inflation right after it? And so maybe the housing prices go down, but maybe it's temporary, and that's the buying moment. So get your money ready and buy it when there's a quick whip down in a recessionary plan. Because I'll say this about the Fed, Joe, if inflation starts to come down to a certain level very quickly, and there's a recession and everything's crashing, people are losing jobs, and it gets really bad really fast. If it gets bad enough, they will reverse course, bring the rates down, and start printing money. And of course, you might want to buy those houses before that happens, right? Before the inflation comes back.
Yeah, you know what? This is, again, all I bring it out there for people to understand what's happening here, and really what Blackstone and all these other groups are doing, because it looks like all of these private equity companies that are heavy in real estate are building war chests to get ready. They feel like there's going to be a major crash, but to Jason's point, they're going to swoop in and buy it all up. And by the time we realize that, hey, wait, the bottom's in, right, it'll be too late, right, because they'll have already bought all the properties out there. The other thing it says, and again, this is not just a United States problem, right? The ability to own things like houses, like office buildings and the like, farmland, right, becoming more and more difficult, and we're seeing more and more of these properties in the hands of very few, Jason.
Right. I mean, just look at the fall of the Roman Empire, Joe. You had the Dark Ages, you had peasants, you had lords, and the peasants didn't own anything, Joe. They just barely got along doing whatever work that was necessary so they could be fed and have a place to sleep. That's really where we're headed. I mean, Joe, it just seems like the middle class is disappearing right in front of our face, and a lot of people just walking around out there have no idea how bad that's going to be, because the middle class is the only thing keeping the average person more free to do as they want, Joe. The middle class, the working class, the business class, that's what gives you guys out there your freedom, because once that disappears, tyranny will be from all sides, Joe.
Yeah, and again, this digital currency, this is the ultimate, right, bailout, and what I mean by that is this is going to be how they're going to fix it. And actually, hey, as long as we agree to give up our liberties and our freedoms, maybe they're going to throw us a bone. I want to go back. Joe Biden issued an executive order. I want to say it was back in March to get ready for a U.S. central bank digital currency. The executive order states that the principal policy objective of the United States with respect to digital assets are as follows. We must protect consumers, investors, and businesses in the United States. The policy goes on to articulate that digital assets have profound implications on crime, national security, and the ability to exercise human rights, financial inclusion and equity, and energy demand and climate change. Right? Did they miss anything? Right? This is what it is. Right here, it just flat out tells you, listen, we got to have this digital currency because, you know what? We've got to protect us from ourselves, right? We have to, because you know what? You're not doing a good enough job. I mean, come on, Jason. We're not having enough inclusion and equity and of course, climate change, right? You guys aren't doing enough, so we're going to do it for you, and we're going to do it with this digital currency.
I've been hearing a lot of murmurs and a lot of little stories starting to bubble up about, hey, maybe we won't have a coronavirus shutdown. It might be a climate change shutdown. Joe, what a great way to hide the markets crashing and the Fed's schemes. You hide it because, look, we don't have enough oil. We have rolling blackouts all over the country. That's because of climate change. We need to have people stay at home for a few weeks till the electric grid can catch up. I mean, can you imagine? And Joe Biden, he's the right guy for that job, isn't he?
Oh my gosh! Now I'm reading from the order. Okay, future regulatory, governance, and technology measures will be designed to counter illicit activity. See, here's this crime thing. It must be huge. I mean, they just don't stop with it. I mean, people are money laundering left and right, and really what it really means, okay, with that little line there, counter illicit activities, right? No more cash. We want to know what you're buying. We need to know. Matter of fact, we're going to know. Everything you do, cradle to grave, we're going to know. And you know what? If you're buying things we don't like, we're just going to ban it. It's just that simple. Enhance the efficacy of our national security tools. Again, you got to have security in there. Right? They love to do that too, don't they, Jason? Oh, we're protecting, we're securing you, right? We're doing all those buzzwords, which really means
right.
We're going to limit freedoms.
Yeah, that word "tools" there it is again, as if they're fixing something, Joe. We're building something. We're fixing something. We got the tools. The tools, Joe. I'm starting to get tired of that word "tools," Joe.
We can build it, right? Yes. By the way, Bradford Newman is this guy's name. Bitcoin Magazine. He doesn't like this bill either because he's a Bitcoin guy, and he's basically saying, listen, the government's going to control all of it, right? They're going to regulate it to death. They're going to regulate private cryptocurrencies. I told you that from the beginning. I don't think maybe a few survive, but that's probably it. They're saying that the government is going to issue its own government-controlled, they're going to call this digital token, if you will. But again, when we're talking about what does it mean, this means the government is preparing. Think about what we talked about yesterday in the Eurozone. Here they are after 11 years. They raised rates for the very first time. 50 whole basis points. Oh, boy. And as they're doing that, they also are like, oh, by the way, we're getting ready for the next bailout because it's going to happen really soon. We actually have to prepare for it right now. Right? The transmission protective instrument, right, that they're going to use to bail out EU government bonds in the EU. They're getting ready. The United States, through executive order, is getting ready. What do you think this cryptocurrency is? It's really going to be what? A form of bailout for the United States. And the bottom line is the people holding the bag are us. We're the ones that are going to be doing the bailing out, Jason.
That's right. I mean, the whole thing is rigged. Remember, Joe, when Biden didn't get his Build Back Better passed? Remember that? A couple of rogue Republicans decided to knock it down. Why do I get the feeling that the Fed was finally figuring out that the inflation was real? They know that if they pass another huge spending bill, that the inflation might have got even worse, so they shut that down. But look what Biden's going to get now. There's big crashes coming, and things are going to get real tough on a lot of people. And what is he going to do? He's going to go out in front of everybody. He's like, I told you to pass Build Back Better, and now it's not built very well. So we better now, and about the time that they need to start printing money again, Joe, why do I think Build Back Better is going to be in place, and ESG and all that stuff, and digital currencies will be hot on its tail, right?
Yeah, and again, all the signs are out there. right? That they're actually, hey, we're playing the game, right? We're pretending to fight inflation, but really what we're doing is we're preparing for what we've already done. This was done. Listen, this was sown back in 07 and 08. I know people don't like to hear it, but they didn't fix anything. Janet Yellen, Ben Bernanke didn't fix anything. What they did is they covered it up. They covered it up with trillions and trillions of dollars, right? They kicked the can. Let's just kick the can down the road. Let's kick it down a little more, kick it down a little more. I mean, think about the unprecedented levels of debt that we've gone into since 2006. Because really, it started in 06. It just didn't come to light until 2008. Wall Street was still pretending it was, kind of like now, right? Wall Street's kind of trying to pretend it's not happening. It's happening. And all of those things that needed to crash and fail are going to crash and fail, and they're going to restart and start over again with this digital currency. The question, again, I keep asking everybody, how much of this sandwich are you willing to eat? 800-951-0592. Again, gold's up here, 1730, 31, 32, something right around there, 1730. Silver is higher as well today. And Jason, I think, if we're looking, is the bottom in here? I think it may be next week's going to be the big week, right after this, and whether it's 3/4 of a point or a point, I think it's going to be 3/4, but doesn't matter. Nobody, even the Fed themselves, is like, hey, after that, listen, we may do a 50, but Wall Street is already pricing in that the Fed is going to go back to zero. And they're saying they're going to start lowering rates next year. This is what they're getting excited about, right? And again, I don't know, but think about why gold's down right now. Gold, the dollar. Oh, look how strong the dollar was. Blah blah blah. Now Europe's raising rates, so we're probably at the dollar high. Could very well be here. May go a little higher from here, but there's probably not a lot left in that rally. And it sure seems like everything needs to go back the other way. They're talking about, think about in this terms too. Government debt, Jason, can't handle 5% Fed funds rate. They can't handle, or more or less, let's face it, they really can't handle 3 or 4%, right? Because the interest payments alone are going to start just consuming these nations, and us being one of them, right? There's only so much you can do. Look at Japan. Japan literally is saying, hey, listen, we can't even fight inflation. We can't even tolerate 50 basis points. We can't tolerate half a point, more or less 1 point, 2 points, 3. After next week, the Fed's funds rate's going to be, somewhere between 2.25% and 2.5%. And we've got nations out there, hey, we can't even tolerate that, Jason.
That's why I've kind of thought that what the Fed's really trying to do is trying to inflate their way out of this a little bit. If you raise the price of everything in comparison to the debt, then maybe you can make those debt payments. It's kind of like a fine line, Joe. If the markets, if the Wall Street's thinking that the rates are going to go back to zero, I don't think that's going to happen. But I could see where if this recession hits hard and you get a really hard crash in the markets, I could see them dropping the rates by next year. But I get this feeling, Joe, that the inflation is this constant problem that's not going to go away. And the Fed doesn't really want to make it completely go away, so I don't think you see 0% rates at all. Well, I could see them go up to 3%, Joe, and then we'll tail it down to about 1.75 for a little bit to bring things back a little bit. Maybe we'll throw a little money into the economy, and then what happened? The inflation will come right back, and it'll all go back up, and then they'll start raising the rates again. I think we're going to be starting to see a lot of rates going up, and then maybe going down for a little bit, and then back up again, Joe. I don't think people understand this is permanent now. This kind of thing is going to be permanent.
Yeah, once inflation takes hold, it's so hard, and we don't have the ability. Listen, plain and simple, there is no Paul Volcker this time around. Why? Well, it's simple. We can't afford the interest.
Yep.
Can't afford the interest. Just can't do it. Look at what the bond. Listen, I don't know what's happening. I don't know. Right now, the Dow has now gone negative to join the S&P and the NASDAQ. But on Wednesday, there's no doubt about it. Right? We're raising at least 75 basis points. Everyone agrees. So that's going to put the Fed's funds rate to 5 and 2.5%. Okay? The 10-year note right this second is at 2.77. I mean, the note is almost at where the Fed's funds rate is going to be. That is a horrible thing. That is essentially the bond market saying something is broken. Because right now the 10-year note should be at a minimum 3.5, 4, something like that. I mean, back in the good old days, before the financial crisis, whatever the Fed's funds rate was, let's just say it was 5%. Well, actually, let's just use factual. It was 5.25% August of 2007. You know what the 10-year note was? Than that. That used to be the average. Hey, if the Fed's funds rate's 4, the 10-year note is 6. If the Fed's funds rate is 6, the 10-year note's 8. Now think about where we're going to sit right now. We're saying that the 10-year note is a half of a point or maybe even only a quarter of a point higher than the Fed funds rate. Something is broken, significantly broken. I don't know if it's possible. Is it possible that the 10-year note could yield less than the Fed funds rate? I don't think it is.
It's just buying and selling, Joe. I think it's possible. It's not supposed to happen, right? But anything's possible. It's a rigged system. It's all fake and phony, Joe. So whatever has to happen is going to happen, right?
This has to be. This just is indicating to me massive buying of bonds. This is massive.
Yeah. Well, Joe, do you want to hold it?
Something's getting ready to break, right? I mean, these aren't. This isn't mom and pop. This isn't me and you. This isn't your 401k account or your Schwab or E-Trade account. These are massive institutional investments, and right now, you know what they're doing, Jason? They are running away from the equity markets. Like I said, something's got to be getting ready to break. This is incredible.
Well, do you want to hold cash and watch the inflation eat that up, or do you want to go to the markets and watch the markets go down faster than the inflation to eats away your cash? I mean, there's not very many places for them to go, Joe. It's like I said, it's going to go and it's going in a direction. I think some players at the top, you talked about all that money going into those big property buyers. Looks like they're putting their bets on. Well, at least I can rent this out and make a little money. I mean, it just seems.
Well, yeah, let's face it. You bring up a great point. Blackstone doesn't leave that. They're not leaving $30 billion in the bank.
That's right. Check this out.
They're not doing that.
Listen to this little fact I saw yesterday. You would think the top 25% earners in this country would have significant money in checking, not savings, checking. And I saw the numbers for the lower income people and the middle income people. You group them together, Joe. They have about less than $2,000 average in the checking account. So you think, well, the big guys, the football players and the celebrities and the millionaires, they only have $6,000, less than $6,000 in their checking accounts, Joe. There's a lot of people don't want any money in there, Joe. We're not the only ones talking about it.
They don't only have what you need. That is it. We'll be back after the break. 800-951-0592. And just, man, this is what a terrible situation we're in right now. Just breaking headline here. Rents just hit a new all high. And we're sitting there talking about no one's buying houses and rents are skyrocketing. And we're talking about rate increases in the bond market, sending this massive warning sign. I mean, we've been inverted now for over 2 weeks. And then today, just a massive amount. Yesterday, the 10-year note, 2 days ago on Wednesday, was almost 3%. To go down to 2.77 in less than 48 hours, that is a massive amount of money being put into bonds because they want no part. I don't know what's coming. I don't know what's going to happen. I mean, Wall Street's been rallying, and I said I thought that it would. I told everybody, hey, get ready for a rally. It's going to rally for 2 to 4 weeks, and then it's going to unwind. And Jason, I just don't know what it is, right? These kind of moves, especially, like I said, we're having this equity rally. You would think that they would be throwing more money into stocks, but they're not doing that.
Well, some of the bigger millionaires that we know, like Bill Gates or guys like that, they're selling their stock right now, tons.
Yeah, maybe that's what it is, right? Hey, we listen to Joe. We know that it's going to unwind here. Let's take our profits down. That could be part of it.
Right.
You brought up a great point about how the rich people, they don't have. They're not, well, you know what? Because usually they've got great financial advisors, if you will, and they tell them exactly what I'm telling you. Dude, don't be a fool. Have what you need in your bank account, but don't have more than that.
Well, think about it. A guy earning $60,000 has $2,000 in checking, and we're not even talking savings. We're just talking, right. maybe a supposed savings, I guess, if you want to have some money there for bills. But then the $1 million guy's only got $6,000 in there.
Yeah, because he's going to put it on a credit card.
That's right.
Just use your card. We'll pay it off. Don't have money in the bank.
That's right.
They're not walking around with millions of dollars in the bank. Are you kidding me?
No, it's an interesting little number, isn't it, Joe? I was looking at this.
Right, you would think, even that number shocks me, right? Because I was like, all right, they probably got, $50,000, $100,000 in their checking account, or at least in their, somewhere they can transfer it over real quick because they want to buy a Lambo or something. I don't know, right? Well, yeah, you need more than that for a Lambo.
Right.
But you know what I'm saying. But the realities are that's not the case.
Well, and it is an average, so you might have a couple of guys with 50,000 or 100,000.
Yeah, but an average just tells you, hey, there's a lot of them. Think about how many billionaires have to have less than $6,000.
Exactly, to balance that out, Joe.
Just the average.
Exactly. How many of them have almost nothing in there? But let's face it, if you're massively rich, you don't have to have a lot of money in checking, really. You could just pay your bills a year ahead all the time. You don't really have to have anything in there, do you, Joe? Like the average guy, he has to make the money and then pay the bills.
You're a millionaire. Your house is paid for, right? Your cars are paid for, right? You just basically need money to buy food, right? That's really food and gas, right?
Yeah.
Pay your utility bills.
Yeah, Joe. There's been a couple of times when I'm a little bit ahead on my finances, and I see the electric bill come in. Sometimes I'll just pay I'll estimate what the next 3 months worth of electric bills are, so that I don't have to put the stamp on the letter because I do paper billing. I don't do the electric stuff, and so I don't have to send the bill. I can save the stamp and the envelope and all that, and I pay 3 months ahead. I think a lot of these rich guys, Joe, that's what they do. Hey, I'll pay an estimated 1 or 2 years worth of water and electricity and gas. And and then once that all gets eaten up, they just send another big payment. So you don't really have to have a lot in checking, Joe, and that shows you that they don't want it there, right?
Yeah, exactly right. And again, I don't know the timing. I've been saying October. Listen, Monday this bond market could go back the other way. It's just. This is not a good development. Let's just put it that way. This is the bond market really, especially because we know the Fed is going at least three quarters. So for the 10-year note to not even be 3%, to be down here at 2.77, it just says to me something is wrong,
Yeah.
something that I don't have privy to. I go back to what Goldman Sachs said a few days ago and warning all their millionaire and billionaire clients, this thing's going to come to a complete stop. That's what they said. Complete stop.
It happened happened in 2020 artificially, but it happened, Joe. So I think that was their test run. Can society survive it? COVID aside, can society survive it? And that's why I mentioned last week the bullwhip. I think we have recession, and then inflation, then recession, and then inflation. I think it's going to be very hard for them to keep complete control over it, Joe. I don't think we ever go back down to zero, but I think we drop rates. Then I think the inflation from throwing any money back in there to try to help the crash will make an inflative cycle, and we may see that it's going to be very hard for them to create a balance. There's going to be a lot of turbulence, Joe. I could even see it happening on a yearly basis, Joe, or every 18 months that this sort of cycle happens. Nobody's going to have any faith in the markets, Joe, at all in the next year or two.
Yeah, the credibility is going to be really interesting to see here in the future, because I don't. There's no way that the Fed can get out of this inflationary cycle with having a Fed funds rate at 2.5% or 3%. That's just not going to do it. Then to talk about going back to zero, I mean, it's absolutely insanity. But that's why you have something outside of the system. 800-951-0592. Final segment coming up. 800-951-0592. Gold's up again today, 1730 here, up about $16 right now, $17. Silver has now gone to unchanged. The Dow, the Nasdaq, the S&P are all lower today. $20 gold pieces, $21.40. If you buy 20 or more, we'll go to yesterday's price of $21.20. So you'll get a break there. And then I want to remind everyone, 10th ounce gold eagles holding yesterday's price. They were $240. Matter of fact, they were $240 on Wednesday. So you think about gold here in the last 20, 30 plus hours has gone from about 1680 to 1730 here. We're going to hold this price through the weekend on 1 10th ounce American gold, $140 at 800-951-0592. And then on the silver side, and Jason will tell you, man, supplies are just limited, Jason.
That's right. I mean, it doesn't mean you can't get it. I mean, it's out there, but you have to pay for it, and that's going to happen more and more. I mean, the last 2 years, 2+ years, Joe, all we've talked about is, well, every time that there's a downward shift in gold and silver prices, the premiums just pick up. That's why we've had these obscene premiums on silver for all this time, but it doesn't look like it's ever going to really let up until the silver spot price shows what it's really supposed to be on the physical market, Joe.
Yeah, it's there's been some reports circulating that a billionaire has been making huge purchases of American silver eagles all this year. So it's basically saying, hey, these premiums, just one billionaire, and they're not. And believe me, the number. It's not like they're spending billions of dollars. It is a multi-million-dollar order that continues. They just month after month after month, which is creating the issue with silver eagles. Essentially, one person's almost buying the monthly supply, Jason.
Yeah, it doesn't take a lot of buyers, and we all know the story of the Hunt brothers. And I learned a whole bunch more about the Hunt brothers recently, but those guys went in there and caused silver to go to $50 an ounce back in 1980. I mean, so it doesn't take a lot of guys like that, Joe, to suddenly and very quickly change the price.
Yeah, absolutely. 800-951-0592, $20 gold, $21.40, buy 20 or more, $21.20, 10th ounce American gold eagles at $240 at 800-951-0592. Next week's going to be a really interesting week. We'll watch this bond market. We've been getting these signals here. Today is not a good signal either, as bond yields really just collapsing almost down to where the Fed funds rate is going to be. Could you think if Jason's right and they go a full point, that will put the Fed funds rate between 2.5 and 2.75.
Yeah, it
might. With a 10-year note at 2.77.
Might happen, Joe. Might happen. Maybe the 10-year goes down to 2.5 next week. Make it even worse.
800-951-0592. Run for cover, right? That just seems to be what the big money's doing here.